When the stock fell, and it was not once upon a time, till about 4 or 5 weeks ago, it came to sub 50, sub 40 when the promoter or the earlier promoter was exiting. Did you get panic calls? Did the regulators start monitoring you? Were you in touch with the regulator? How did you handle that decline?
Yeah, I think between 30th September and 1st of October, the stock fell something like 34 or 35%. And it's a fact that, it did concern a lot of people. It was a very unusual thing. So this, on the 1st of October, this happened. On the 2nd was obviously a public holiday. On 3rd of October, even though we were in the silent period, we went out there and did an analyst call, which had nothing to do with our financials, but only to be able to explain the situation, that what exactly had happened. So first and foremost, as you rightly said, that there was a stock of the previous promoter, which got sold by the mutual funds. It was something that was unanticipated, but equally something which was completely extraneous to the bank. It had nothing to do with the operations of the bank. The second thing was, unfortunately, the entire aftermath of PMC was at its peak. And the third thing was that there were a couple of these e-commerce sales which were on, which had put a lot of pressure on the system of the backhauls of the telecom carriers. And as a result, net banking for not just Yes Bank but for a couple of other banks as well was down. So when depositors tried to, or clients tried to use net banking and they found that it was not working, there was this whole concern about PMC, and then of course the share price which had fallen. Obviously, it did create a certain level of disquiet among our various stakeholders. And yes, we did get calls. But on the 3rd, when we came out and we explained that the fall in the share price was something which was completely away from anything to do with the operations of the bank, I think the markets recovered very quickly as well. I mean, if I remember correctly, on that day itself, I think the stock was up 33% odd. So yes, I think that little aberration and that sudden fall, I think did create a bit of I won't say panic, but it definitely did create a little bit of uncertainty in terms of what was happening.
Are you constantly in touch with the regulators?
So I think
are they monitoring the stock price fall? Are they monitoring the progress at the bank?
I think if you look at the banking regulator, they don't really look at the stock price. And I think what happens with the equity markets and the share price movement is of a lesser concern to them. I think for them, the single biggest concern will always be, as it should be, is the interest of the depositors. And they will always want to make sure that depositor interest is protected and remains at the top of everything else. So we keep a very close dialogue with the regulators, keep them posted at all points in times, as we did even in that particular situation. And I think we found the regulator to be exceedingly supportive. And always do bear in mind that today it's very easy to be critical of the banking system. But if through the Asian crisis, if through the financial crisis, Indian industry did not get impacted and the Indian economy continued to stay on steady footing, don't forget it's because of the banking system here, which stayed rock steady and all of that. And I think at that time people's view was that it was an over-regulated market. But today, I think a lot of regulators globally are actually taking their cues from Reserve Bank of India. So I think it's a very enlightened regulator, and I think has a very good grip on the banking system here.
Just one more follow-up question on fundraising. You raised your previous capital at 80 rupees plus, 83 to be precise.
That's right.
Are you looking at raising capital in the same range? Because when you got non-binding bids, I'm sure they must have asked you for some price indications also.
Right. So I think the pricing guidelines as far as the market regulator is concerned are very clear. And first and foremost, those will need to get respected. Talking about the QIP price, would we want those investors not to get diluted in terms of a lower raise? I think that would be the endeavor. But having said that, I think the primary focus of the bank, not just the bank, but even our shareholders, is that we need to get the bank adequately recapitalized, and we need to get it recapitalized sooner than later. And I think so that is going to be the driving force. Although we will try to make sure that the dilution, if at all, is minimal for existing shareholders.
Okay. Now we've discussed the concerns. Let's look at the good scenario. You're able to raise capital at a good price. At whatever price the capital comes in, what happens then?
So first and foremost, let me make a slightly broader point, Nikunj. I don't think there's another industry which is as interdependent and as interconnected as the financial services industry is. And so I think we must fundamentally, it should actually be genetically encoded in us to be very supportive of each other and to become an ecosystem of facilitators. Unfortunately, I think the way the whole narrative around the financial services system is, I think we've become the trust lines have broken down. There's no question about that. And I think there's too much finger pointing. So first and foremost, I think we keep saying that, there is an impasse in the economy and things need to change. It's not just the government's job. I think we must learn to help ourselves, and one way to help ourselves is that we are aligned in our thinking, in our thought process. We cheer for each other, and we are supportive as a community. So I think that is number one. Number two, as I have often said, that are the exposures which draw so much attention. We are not the sole lenders. The difference is really our capital levels vis-a-vis that of some of our peer banks. As soon as that gets sorted out, I think the narrative around the bank will change. Third, which is very fundamental right now, is tell me one large economy in the world which is as underbanked as India is. No. And in a situation where you have the NBFC sector somewhat beginning to reset itself, I think the growth opportunities for a well-capitalized private sector bank are absolutely enormous. And I think investors see that. So my sense is that once we get recapitalized, you will see the bank come back on the front foot very quickly.
So what potentially could be the new normal for Yes Bank? I'm assuming that you're able to raise capital before 31st of December.
Yes.
1 month more grace period to the timeline you are indicating. So what kind of growth automatically will come back?
So I think when we say timeline, what I had said was that in some of the communication yesterday, that the bid that we have, is valid till 30th of November. We would want to obviously reconvene as a board and very quickly take a decision in terms of what serves the interests of the bank best, while being fair to all the investors who have put in bids. I think what could be the new normal for the bank? I think two things. One is the growth. Second is the kind of growth that we want. We want growth where the businesses become, like we have always said, more granular. I think the mix between wholesale and retail becomes much more robust. I think we can grow in the high teens to begin with.
So it's not going to be 30-35% what you did in your 2 years ago, 3 years ago. You're not aiming at that kind of growth.
No, I first and fourmost, we are not aiming for that. And second, I think in an environment like this, it is also not recommended. Okay. So we want to have a lot more considered growth, be much more thoughtful about it. But more importantly, it's not just a question of growth in terms of assets. I think we also think we have a lot of opportunities on the back of digital to grow our liability franchise, especially the granular retail franchise. And I think that will be a very big focus area.
Okay. Just to wrap today's discussion, and we've just focused on the important aspects. First, the asset side and the liability side, both the asset sides we've covered. The timeline, and I don't want to get this one wrong because this will be quoted. You got a non-binding bid, and the non-binding bid states till 30th of November.
That's right.
Which means the board in next 2 weeks or 3 weeks will definitely take a decision on fundraising.
Yes.
So what could be that time period in which you will firm up? Which way would you be going? Would you be going through the private equity way? Would you be going through a family office way? The pricing? Do you think everything will be settled at a board level in the month of November?
Well, absolutely. I mean, I think, we will want to do that ASAP, not even wait till the end of the month. I think it's not so much a question of whether, it is investor A, B, C, D. First and foremost, it could be a combination of all of them, right? I think, like I mentioned previously, that we would want to make sure that the bank gets recapitalized fully and quickly. And then it should serve certain strategic purposes as well, that this capital that comes in is truly transformational capital for the bank, not just growth capital, but transformational capital for the bank. And I think that's a decision which the board needs to make, and we will make that sooner than later.